Happy New Year, everyone. I hope you had a great beginning of 2021. And as every beginning of every year, soon, in the next few days, you will be bombarded with RRSP information. Now's the time of the year where all the financial institutions go out there in desperation, searching for your money. Everybody wants to sell you RRSP, wants to put your money into this type of accounts. But you have to beware of RRSPs. Last week, I talked about the good things of RRSPs at retirement. Today, I will tell you when you have to beware about RRSPs. My name is Ruben Torrens. You know by now probably that I have been 35 years in financial institutions and it's my time for retirement. I'm in the process of retiring, but I'm not going to retire completely. I just love this stuff too much. And, um and I wanted to warn you because you may lose money. There is a lot of people that is losing money now that they retire, and they don't even know that they're losing money. And this is what happened. And you will see why they don't even know. Because what happens with RRSP is that there is a deduction. For example, if you earn $50,000 in 2021 and you deposit $10,000 in RRSPs, so now your taxable income becomes 40,000. So, and the money that you deposit into this account, you don't pay tax. And the money that this money earned because it's invested, you don't pay tax. But once you retire and you withdraw this money, or whenever you withdraw the money, even if you're not retired, then you do pay tax. It becomes taxable and 100% taxable as income, as if you happen to earn that money on that particular year. So this is how the RRSP work. But to see this, because it's about taxes, we need to look at tax tables and the tax brackets. How do the tax brackets work now when you're working, and then how do the same tax brackets work at retirement? Because the deal with RRSP, the big argument from the government and the financial institutions, is that deposit money in RRSP while you're working, that your tax rate is high, and withdraw it when you retire, that your tax rate will be lower. Will it be lower? Maybe, but maybe not in every case. And this is what we're going to find out by looking at the tax tables. Now we're going to take a look at the famous tax brackets. Everybody talks about tax brackets. So in 2021, and by the way, this is tax rates for 2021 and for the province of Ontario combined with the federal tax. This is the total tax you pay in Ontario. I did it, Ontario. I'm not going to go through every province and territory. This channel is fairly new. I don't have that many viewers yet, and I suspect that most of the viewers, if not all, they're in Ontario. However, if you happen to be in another province of territory and watching this video, and you like to see the rates for your province or territory, just leave it in the comments below the video, and I prepare the table for that particular province or territory. But in the province of Ontario, in 2021, if you earn up to $45,000, 45,142, on whatever amount you have taxable, because from here you have to deduct your tax credits, right? Like the basic personal exemption and other credits that you may have. So whatever amount of taxable income you have below $45,000 is going to pay 20% tax, 20.05%. So from 45,142 to 49,000, so it's going to pay 24%. But only this amount, the amount between these two amounts, is going to pay the 24%. The balance still paying the 20%. And whatever amount you have between 49,000 and 79,000 is going to pay almost 30%. But again, almost the amount between these two amounts. And there are other brackets and higher, and we move higher as we move higher on income. For example, if you earn up to 150,000, between 98,150, you're paying 43 cents on the dollar for that amount. And you can pay even up to more than 53% in tax if you earn more than $220,000. But I stopped the brackets here because I'm talking about the beware of RRSPs, and And if you earn more than $150,000, just you don't need to be aware of RRSPs. RRSPs are definitely your thing. But this is what happens while you are working. This is the money that you earn from employment. Now we're going to take a look what happens to the money that you earn when you retire and how does it get taxed. But before doing that, we need to take a look at the old age security and the guaranteed income supplement. And the reason why is because these are tax programs. These are part of the general tax revenues. This is how these benefits are paid. So the old age security, if in 2021 you earn more than, give or take, $80,000, the exact amount is 79,000 and change, you will lose 15%. You will surrender 15% of any amount of income over 80,000. So let's say you are retired, you earn $80,000, and you take $10,000 from your RRSPs. Now you earn 90,000. So that $10,000 extra will pay your regular tax rate plus 15% in old age security clawback in the tax recovery program. And the guaranteed income supplement is even worse, because if your income is in the lower end, and I already talked about in another video about the relationship between the guaranteed income supplement and the RRSPs. So if your income at retirement will be on the lower end and you suspect that you will be bound to receive the guaranteed income supplement, so stay away from RRSPs altogether, because you're definitely going to end up losing money. So there are no questions asked about that. But let's see what happens with the tax rates. So let's see what happens with the taxation when you retire. Well, now, if you were retired during 2021, on the first three tax brackets, you pay the exact same thing as if you happen to be working. There is no difference. You have other credits. Yes, you do. You have the age credit if you earn little money, but the age credit works only if you earn less than $70,000, and works fully if you earn less than $37,000. So deducting the credits like RRSPs may work if, up to this point, may work if you do not qualify to receive guaranteed income supplement. But from here on, here is what happens. If you earn more than $80,000, so now you have the bracket between these two amounts, 79,000 and 90,000, is 31%, as we saw on the other table. But now the government is collecting back your old age security, 15% of your money. So that makes it 46.48%. And then if you earn more, it's going to be more. And if you earn more, and if you earn close to 100,000, so any excess amount, so it's going to pay like close to 60% in tax, because you're going to pay 43%, which is the regular amount, plus the 15% clawback from the old age security, which makes a total of 58 cents for every dollar. This is a crazy amount. You don't want to do this. If you suspect that you're going to be in this position, first, if you suspect that you will be receiving the guaranteed income supplement, stay away from RRSPs completely, no questions asked. So if you suspect that your income at retirement, without counting RRSPs withdrawals, because the RRSPs are voluntary, without counting RRSP withdrawals, say you have a high CPP plus old age security plus employer pension, a large employer pension, and your total income will be in the vicinity of 80,000. So whatever amount you deduct from you get from RRSPs, so you withdraw from RRSPs, it's going to pay the 31% tax plus the 15% tax recovery from old age security, a total of 46 cents on the dollar. Most likely, you didn't save this amount when you deposit that money on RRSPs. So make sure that you have this discussion with your financial advisor, because you're going to be losing money at retirement. There's no questions asked. This is a terrible situation in which a lot of people listen into that situation, and they don't even realize what's going on, because they never seen the breakdown of these two numbers. This number is the tax rate, and this number here is the old age security, the tax recovery. So don't forget to have this discussion with your financial advisor. And this is the reason why you have to beware of RRSP. So be very, very careful with what you do with it, either at the lower end of income or at the a little bit higher end of income. So I hope you enjoy my video. I hope I give you a good idea on how to save money for the future. If you find value in it, please subscribe to the channel. You're not going to miss any future videos. It's free. It doesn't cost you anything. It doesn't take any time. It's less than a second. And give me a thumbs up if you can. That will help me a lot with YouTube to maintain the channel. Other than that, thank you for watching, and I'll see you soon in the next video.